a new report from Matrixport shows that most Bitcoin miners are selling their Bitcoin onto the open market, suggesting that the low revenues and continued pressure on Bitcoin mining difficulty is causing miners to just sell their Bitcoin and not hodl it, which was mostly the case back in 2021 and 2022. Adam, I'm going to throw this story up to you. I think anyone who's marginally paying attention to the mining industry isn't super shocked by this. Luckily, we have like a lot of public companies out there nowadays for Bitcoin miners. There's over 20 of them listed on like NASDAQ, London Stock Exchange, even up in Canada. So we do get their financials every quarter, sometimes even every month. We see that most of these miners are actually just selling into the open market. But any thoughts on it?
Yeah, I mean, I think it's obviously been a really challenging time for Bitcoin miners. A lot of them took out dollar-denominated debts, and then as the price of Bitcoin went down, that caused real problems for them, forcing them to liquidate at prices that they were not happy with. A lot of these Bitcoin miners really kind of made their play, saying, hey, we're actually not so much a miner as we are a way to bet on the price of Bitcoin because we retain as much Bitcoin as possible on our balance sheet. And I think that, again, like that narrative kind of fell apart as the price of Bitcoin went down, but their dollar-denominated debts for building out everything, and continuing to pay for ongoing costs did not. So not surprising to see this. I think that they're probably thrilled that the price is where it is right now because it allows them to continue to operate at costs that are above, in a way that's above their costs, which was not true for the whole time, right? Like during the dips, and the kind of significant stuff we saw, especially around FTX, those numbers dipped below what was probably profitable for them. That's a very difficult situation to be in as one of these kind of larger institutional players. And as you said, like they also have to disclose this if they're publicly traded, right? Which is not great for optics, not great for everything. So this isn't a happy environment for miners, but it's definitely, like a better kind of place for them to be than we were talking about maybe six months ago. Zach?
Hey man, there's significant upside convexity for miners. I'm really smart. I just read that from the report. Don't worry. I don't even know what those words mean.
Is that this way or that way?
Couldn't tell you. Could not tell you, but it's included in the story. Significant upside convexity.
Winning at Scrabble today.
I Googled it.
Yeah, I mean, I don't know. You guys, how you guys liking on the upside convexity? You liking the looks here? I don't know. Will, you feeling good? Yeah,
I'm feeling very convex today. Very convex today.
Cool. Nice.
Yeah, no, I like what Adam said. Like, it's a better place for Bitcoin miners than it was 6 months ago. Zach's thoughts were like useful, somewhat. Maybe.
My brain is mush. We'll
gloss over what Zach said.
Thank you guys.
Now, the debt part is really important here. A lot of miners did take out huge loans. Like these miners had, into the hundreds of millions of dollars of debt. And when interest rates went up, especially when interest rates went up, fastest rate hikes in U.S. history, became very apparent that taking out a lot of debt was a pretty bad idea, especially when the thing that you produce, Bitcoin, basically goes inverse the price of debt, right? So price of debt went up to 5%. Bitcoin went down to as low as $15,000. These Bitcoin miners were in a really bad spot, and a few of them actually wiped out completely, went to Chapter 11. But we're 6 months past that. I think a lot of these miners were able to restructure. They do have a lot of hard assets. They have energy contracts. They have infrastructure. They have Bitcoin miners themselves. So they were able to figure it out, and I think we're in a better spot right now, guys. This is good stuff. We're in a better spot. Jen?
You have this optimism. You keep saying this is good. And then I read the article and it says that mining is unprofitable and competitive. And the machines before 2022, the machines that were produced before 2022 were unprofitable. So tell me the bad part.
The bad part? No, I'm here to show mining. Now, I'll say some good stuff and some bad stuff. The bad stuff is like a lot of these machines are not doing as well as people thought. A lot of these Bitcoin ASIC manufacturers, just like the token producers out there, just pumped out machines as fast as they could. They didn't really meet a lot of standards, and so a lot of them are failing. People are seeing a lot of high failure rates, which is unfortunate because these machines cost at one point about $8,000 to $10,000 per machine. So you're looking at like multiple years to be able to pay it off, and then you can't pay it off because it just broke, and now you have a pet rock instead of an actual Bitcoin miner. So that's one bad part. On the good side, energy is getting cheaper. Inflation seems to be somewhat tamed in that sector, at least getting better. So we sort of have like these two things going against each other. And I think the marginal Bitcoin miner is slightly profitable right now. There are some who are still unprofitable, but for the most part, people are like doing better than they were, again, 6 months ago. I'll throw it back up to Zach.
I mean, I will second what you just said, and I will continue my 2-part streak of saying nothing of value, and I will pass it straight to Adam.
Yeah, I think that kind of one other interesting part here is that what we're really seeing is we're seeing Bitcoin miners act like sort of industrial producers of a product that has no value outside of speculation, right? Like really, that's what we're talking about here. Like if the only value of oil was speculation on the future price of oil and there wasn't actually any utility, you know, for like powering cars and industry and stuff, then you would see similar dynamics here. And again, like that's the weird part about the industry is that in many ways it's hugely competitive, right? It's very expensive and resource intensive, capital intensive, big investments, but the underlying asset is still a fundamentally speculative asset with no utility outside of that speculation. Again, we can talk about like transactional nature, stuff like that. All of that is kind of utility, but it's not really used like that in most of its use. Most of it is people being like, hey, I think the price is going to be higher in the future, right? Like that's kind of the argument for having it and for holding it. So it's a weird industry to be in. And I think it's a weird time to be in that industry. And it's a good reminder, I think, to miners out there that number does not only go up. And when number goes down, a lot of the choices that you made thinking number would go up for a lot longer than it did probably are going to be seen as bad.